Good afternoon, and probably for most of you, good evening, everybody. Welcome to the Moving Markets Podcast. It is Thursday, October the 2nd, 2025. The stock market has been closed for a couple of hours at the time I'm recording this. I had every intention of doing it a little bit early. I did tell you yesterday that I was going to do it closer to the close of the market instead of in the morning, and had a couple of things come up right at the time I was going to get started that delayed me a little bit. And this will be a short podcast because there's only a couple of things that I really have to go over. I don't need to give a lot of commentary on what's going on with the market. Futures were down this morning on the Dow. It didn't take long for it to turn around and be kind of flat and positive and then negative a little bit. The Nasdaq mostly stayed in positive territory today. It was up. I think it went negative briefly for just the shortest time, and I could even be wrong on that. But modest gains on all three indexes. The S&P really pretty flat. 6/100ths of a percentage point is an awfully flat day. The Dow up a little less than 0.2%, and the Nasdaq up a little over 1/3%. But still, it's a continuation of this very bullish market. And I think it's a second day in a row where investors have just blown off and shrugged off this. I think they've just blown off and shrugged off this government shutdown. I think for the most part, people don't care. I think they recognize and see that, or believe at least, maybe they don't see, but they believe that it's going to be short-lived. I, for one, wish it would go on for a really long time. I wish it would go and I mean, I wish a lot of these departments, not all of them, but a lot of them that are getting shut down, I wish they'd never open back up. So, I ranted enough about it the other day, what my feelings about non-essential government offices. I think when you talk about how in a couple of weeks, the armed forces won't get paid, some government offices won't get paid, some of the ones that actually people still have to work. I think that's so nonsensical. When you have a partial government shutdown, if those aren't essential government departments that should remain open and stay functioning and being paid, that I think is pretty ridiculous. So we'll see what happens. I kind of think it'll be, like I said, very short-lived. But we'll see. But investors are blowing it off. Investors don't seem to really care that the government is closed, and I think the markets could falter a little bit if you got a situation where this ended up going into a fourth, a fifth, a sixth week. Then it starts causing people to be concerned about GDP and how it affects the employment situation overall because of the number of government employees that would be furloughed, and it might be a while before they get back. So we'll see. But I think probably by this time next week we'll be talking about, if not before, we'll be talking about how the two sides have reached some kind of an agreement, and both sides will claim victory, and it doesn't really matter. I don't really care. But at least it's not having a negative impact on the market so far. People feel like it's not that big a deal. We're just a couple weeks away from the heart of earnings season. We'll see how that goes when it gets here. The couple of trades I wanted to talk about, I sent out 2 adjustments to caller trades. We sent out an adjustment for Snap, pretty straightforward, and we sent out an adjustment for Uber. I'm trying to decide what I want to do with SoFi. I know we've got SoFi coming right up. Options expiring on the 17th. The stock is trading at a higher price than the short call, the stock is not trading above the strike price of our short call, but our short call is quite a ways out in time, and our long puts, without a doubt, will have to be adjusted ahead of the earnings. So I'll make a decision. I looked at numbers on SoFi today, and I didn't love any of the numbers. So we will get it adjusted in the next few days, probably. I know tomorrow's the last trading day of the week, but by the time we're into Monday or Tuesday of next week, we'll probably get it adjusted and have that taken care of. On the triple play side of things, JP Morgan today dipped below the strike price of our short call on our in the money bull call spread but I really will be surprised if they don't bounce tomorrow. I don't think you're going to get a full technical crossover here on the the MACD is sort of kind of at the crossover stage. I don't think you're going to get it here. I think you're going to get a bounce. However, there's no guarantee on that. So tomorrow morning when the markets open and we see whether or not, I didn't look to see if aftermarket, JP Morgan is a stock that oftentimes does not get much in the way of aftermarket movement. It looks like it is up a little bit, 10 cents a share. But, honestly, it would have to go up almost $2.50 tomorrow, which I think it could. I think it could get back, this much and more tomorrow if the momentum of the market is moving in that direction. We'll see. But watch for a possible adjustment on that if it's not moving up right at the open of the market. Our Google trade, I think we're absolutely fine on Google. I'm not overly worried about that. It's not that it couldn't drop a little bit and get a little bit closer. It actually, after being down for a good portion of the morning, it actually climbed a little bit and was up a little bit. I don't see Google giving up $6.43 tomorrow unless something crazy happens tonight or early in the morning that is causing the entire market to really fall. Now, with that said, if you could get out of Google, if you could exit Google for, I would say anywhere between 15 and 20%, you probably want to take it and get out early in the morning and not give it a chance to turn and go against you. Everything else we have going on is looking really good right now. I don't think there's anything else we need to talk about. I sent a couple of adjustments out this morning on Airbnb, and even Airbnb, if you wanted to exit it right now, the trade is profitable. This was one of our triple play trades from a couple weeks ago. But Airbnb was down a little bit today. It's down a little bit more after market. We rolled a 121 short put out 1 week and down to 119, I believe. And then we rolled our short call down and overall got a little bit of credit between those two rolls. So we've now got a wide enough spread between the long put and the short put that if we had stock put to us and could sell at the long put price, we'd be guaranteed profitable. And we'll get a little bit more than that on the call side of the trade as we continue to adjust that. So we're in the trade a little longer than I'd hoped to be, but it's looking good. And if you wanted to exit with a little bit of profit you have in it right now, that'd be no big deal. Everything else is pretty much set. This is short, but I don't need to talk about anything else. Tomorrow, I've got some afternoon and evening plans, so I don't know that I'll do an early podcast, but I'll probably do it with at least a couple hours of trading left in the market is when I'll most likely do it and give some kind of a wrap up for the week. All right, thanks everybody. Have a great Thursday evening and have a great day tomorrow.